Quarterly theory. Where do we start with quarterly theory? The first thing I'll start with is this is not ICT. It's not an ICT concept. So if that's a thing for you, don't watch this. For me, it works really well. I really enjoy it. It really helps give me a context to what the market is doing and the movements it's potentially going to make to help me understand, how things are moving and where I can find an entry. So quarterly theory is a concept that allows you to break up time into quarters. We can start with a month. You break up a month into 4 weeks. You break up a week into 4 days. You exclude Friday. You can break up a day into sessions, and you can break up a session into quote unquote micro sessions. So I really only care about one session, New York AM session. And that whole session goes from 6 a.m. to noon and can be broken up into 90-minute cycles. So I'm going to show you a little bit about that and how I use that, and at least my current understanding of that. It may develop and my knowledge may grow in this theory as time goes on, but this is what I've got so far. So from 6 a.m. to noon, what I do is I draw this pretty colored box. It's got 4 sections in it. So I draw one end at 6 a.m. and the other end at noon. Now there's 2 options for how this span of time can go. We've got AMDX and XAMD. What that stands for is accumulation, manipulation, distribution, and X. X can be a reversal or a continuation of the previous cycle. And then it's just kind of flipped around. So either you're going to start with accumulation or you're going to start with a continuation or reversal. So the first thing we have to do is identify where we're starting in order to know how the rest of the day is going to go. So looking at this day, which was yesterday, from the first quarter is from 6 to 7:30. And the second quarter is from 7:30 until 9. So we have to identify what happens in those cycles. Ideally, you want to just identify what happens in the first cycle first so that you know how the second, third, and fourth are going to go. Considering these 2 cycles, which one moved the most? This blue area or this gray area? In my opinion, the blue area moved the furthest, and then the gray area just kind of chopped around right here. So this is not accumulation. This is accumulation. So if accumulation is not first, which scenario do we start with? Accumulation is first here. Accumulation is not first here. This is a continuation of price action prior to this, the previous cycle. So that is X, continuation or reversal. So this is going to be our scenario for today. We're going to have a continuation here. We're going to have some consolidation here. Red is going to be manipulation and green is going to be distribution. So you're really going to want to look for a move in the third or fourth quarter today. On an AMDX day where it does start with accumulation, it's just real choppy here. Your second quarter is going to be manipulation, and your third quarter is where you make your money. That's your distribution. That's what you want to hit. I do have bars across the bottom to help me show this without having colors across my chart here. The only downside to these bars is I can't flip scenarios. It's always gray, red, green, blue, when sometimes it's an XAMD day. I don't like XAMD days. They're a little messier than AMDX days. AMDX is usually so clean and you can get a really nice moves. But today I'm showing you an XAMD day because it actually did have a nice move and it played out pretty well. So with all that aside, we've identified the first cycle is a continuation. The second cycle is our accumulation. Nothing's really going to happen here. Nothing really happens until your manipulation cycle, wherever that falls. That's going to be from 9 until 10:30. That is going to encompass, in this particular day, the 9:30 open. So you already know 9:30 is going to the 930 open volatility is going to be your manipulation. So zoom this in a little bit. So what we're doing is we're waiting as price plays. It's still like really slow, really choppy as it comes into the manipulation phase here. You're waiting for high volatility, high speed movements toward something. It needs to manipulate into a higher time frame, fair value gap, volume imbalance, take a higher low or a session higher low, like London's high or something. It needs to take a high time frame PD array of some kind. So my 15-minute chart, 15 minutes is the high time frame if you're using a 1-minute chart to trade. My 15-minute chart is off screen here. So if I go to the left and find something high time frame, 15-minute or above, this particular day did have, I think it did have a 15-minute. Let me draw this out. No, that was way up there. Oh, it's this one right here. So it did have a 15-minute fair value gap that it came into, but it actually had a 4-hour and a daily PD array that was a lot cleaner. So, excuse me. Let me go find that real quick and add it to the chart. You can go back and look at this, by the way. This is just yesterday if you want to go check my work. You know what I mean? Was it that one or was it this one? It was that one. So that's a 4-hour fair value gap. I'm going to get rid of that. And then there was a daily volume imbalance. So I started the daily and I just go down. I look at the daily, I look at the 4-hour, 1 hour, and then 15-minute just to see if there's anything up there that could really catch my attention. Whoops. All right. So now I'm back on the 15-minute. Okay, so you see we start the day down here at this level. You really want to, in an XAMD scenario day, you really want to kind of start looking at the charts around 9. Two particular price levels you want to keep in mind with quarterly theory, also similar to ICT concepts, right? You want to consider the midnight open and the session, New York AM session open. So for quarterly theory, midnight open is midnight open. That one's pretty easy. Let me put that on the chart here. And I make them white. So midnight open is way down there. Since midnight, we've been above that price level. The other one is session open, which is quarter two's opening price, 7:30. That opening price is right here. So as we're coming into the morning, and in this scenario, you're not going to see much until the manipulation phase, which is starting at 9 o'clock. We are above both of those price levels. We already know that we're looking for a bearish distribution. We are in premium. We are above those levels. We are going to be looking for a bearish move. And vice versa. If you're trading below, which we were today, trading below quarter two open, which is the New York true open, and midnight open, if you're trading below that, you're going to be bullish. You're going to look for a bullish move to take your trade. Now, before that, we have manipulation. Before the move, we'll have manipulation. If we're bearish because we're above these price levels, you're going to want to find a bullish manipulation. We always manipulate in the opposite direction of the actual move. So we're going to manipulate up and take a move down. Same with if the other way around. If we're below these two price levels, You're going to be looking for a manipulation down, and then your move will be up, bullish. So anyways, hopefully that wasn't confusing to you, but we're above these price levels. We're looking bearish, so my manipulation is going to go up into something. And lo and behold, at 9:30, price opens, and the 9:30 volatility brings us up right into these high time frame PDRAs. I already knew these were going to hit. This already gave me the context of exactly what was going to happen. So I watched it. You never try to catch the 9:30 volatility anyways. It gets really choppy and it whips this way and that way and this way and that way. It'll catch you off sides and take your money. So wait for that to play out. Goes right into both. Look at how well it respects it. Right into these levels. And now I look for my inverted fair value gap strategy. So what's the first step in the inverted fair value gap strategy? You look for a high time frame interaction. And guess where we are? We're in a 4-hour fair value gap and a daily volume imbalance. Those are pretty high time frame. So now I'm looking for a fair value gap to invert itself. It does that almost right away. It closes really nice and let me zoom up again. Closes really nice and close to the fair value gap, and this candle does not take any swing levels. So there's your entrance. I put my stop up here somewhere, and targets, you can determine your own targets. My targets are typically something obvious. There's this low, and this low. There's other little lows down here too, but what's the big obvious one? Right here. So that's my target. Did it make it? No. That's okay though. That was like 50 points. It's a pretty good trade. So at some point in here, you want to scale. Hopefully you are able to, I use micros, so I can enter with a few micros, and you scale some off. You can scale off at that low, you can scale off at that low, and the rest will just come back to break even, or you can trail your stop loss up. But either way, you have traded into profit. That's on you to take some of that profit. Especially if you're moving 50 points, you never just hope. If you've moved 50 points, you better be taking something. Anyways, we're still in the manipulation phase. So while that was nice, and it does happen, sometimes distribution starts early, especially if your manipulation phase is your third quarter. That 9:30 can whip up, whip down, and you're down for the rest of the day. And I just closed my whole window. You're down for the rest of the whole day. So take these moves if they present themselves, but just realize this can happen. We're still in manipulation. So there still could be other distribution coming. We have quarter 4 yet. In this case, it does do that and manipulates back up into those high time frame levels. I did not take any other trade after that. That was plenty for me, but it does, and it does present itself again right here. So this one is way less clean, in my opinion, but it does work. I wonder actually if that shows up better on the 2-minute, because remember, let me go back and lose my place. Monday. We have one there and one there. So we do have 2 stacked fair value gaps that are trying to invert. And this is exactly why. If you were just paying attention to this one, it does close over right here. Real nice. Looks like it's coming down. But there's 2 stacked. And guess what? It happened to respect the one after it. Whether it's bearish or bullish, it could respect the one after it and come right back on you. So you always make sure it's only one fair value gap, singular fair value gap in the leg. And I wish when you change time frames, it would stay where your cursor is, but it doesn't. So yeah, so we went to the 2-minute, and now that those 2 inverted fair value gaps changed into one big one. So it closed over here and came back on you. That did happen and does happen. Not every inverted fair value gap is a winner. Nothing's 100%. So you're not in the green zone yet. Did you take it? Maybe. Yeah, probably. If you trade like I do, your stop loss is above the high, and it wouldn't have gotten you, but it sure would have made you sweat. But if it did say, if it does stop you out because you like to keep your stop loss close to the gap or whatever it is, that's okay. It comes back, it closes over again right here. Nice and close. Perfect entry. Set your stop loss nice and close. It doesn't tag you in that one. And there's our distribution. This guy rips all the way down to, guess where? New York Open. Did I lose my line for 9:30? Let's go back to the 1 minute. I thought I drew a line for 9:30. So I was going to say, guess where it went? Right to the 9:30 Open. That was my target, right? We were just talking about that. Monday. Oh, God. Okay, here we go. We'll just draw another line like that. Make it green. That's my target. So anyways, at the 2 minute, you would have entered there, and it just rips all the way down. It literally to the tick, at least on micros. I don't think it reached it quite on the NQ if you're using minis. But it bounces around because we end up entering the next quarter of the day. So we have a whole new 90-minute cycle sessions over here. So things happen here that are not, this is over now. But it ends up chopping around a little bit and then smashes right through it. Look at it though. When you see your target smashed through with momentum like this, I mean, just look at these candles. Chop, 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 chop. Wham! That's how you know it's a good target. It wants to take that liquidity out quickly so that people can't change their mind or adjust themselves, and it just takes them out. And as soon as it takes them out, guess what it goes back to doing? Chop, 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 chop. This is exactly the target that it wanted. And it took it with intention and quickly and like, you're done. Lucky for us, though, that's our profit, not our stop loss. So yeah, it rips for 83 points on this one. Wish I would have taken it. It wasn't as clean as I liked. So I didn't, but in hindsight, it was pretty good. I didn't like how it did this whole head and shoulders crap up here or whatever. This double top, sorry. I wish it would have just done this. Had this one closed and taken off. I like when it just does that and doesn't dance around up here. So A+ setups are what I look for. Real clean. Does exactly what I think it's going to do, and it doesn't go back on itself. Like, okay, what? It's trying to fake you out. It's trying to trick you, and I don't want to get caught up in that. So depending on the setup, like this one, went up real fast, grabbed some liquidity, and rebalanced some of this area, and then straight down. And that was it. I entered that because it was nice up, down, real clean, real fast. I don't like this dancy stuff, but it worked, nonetheless. It worked out really nicely. So that's kind of what quarterly theory is and how I put my model, my entry model into that. It's just a really good way to separate out price into sections and really understand what's happening. So I can really fast, because I don't want to go too long on this video. Let's just remove drawings. Go over to today. Yeah. See, what I kind of think is funny is when you look at this chart now without those separations, and you're sitting here like, wow, I have no idea what's going on. It's all over the place. You know what I mean? So then as soon as you draw out your cycles and some levels, some key levels for it to interact with, you're like, oh, that makes perfect sense now. Just watch. So today, I'll draw out my box, my pretty colored box, from 6 a.m. to noon. All right. So again, from 6 a.m. to 7:30, what does this look like? Pretty good down move. It's a continuation. Continuation from the previous cycle. It's not chopping around. And we get to here, and it's just chopping around. Basically, from where it started to where it ended, there was no movement. In this quarter, it started way up here, ended way down here. So that's how you can tell the difference between XAMD and AMDX. So here we are again with another XAMD day. Not my favorite. And you'll see why. It's just a little messier. You notice like when we were looking at yesterday. It was just a little messy up there. So I've got the 7:30 open, Q2 open, already marked here, and midnight open right there. As you can see, as I was explaining earlier, we were below these opening prices. So I know I am going to be looking for a bullish move, which means I need a bearish manipulation. So we wait until the red zone here, which is our manipulation zone. It's Q3 today because of the XAMD adjustment. So manipulating down into something. What's down here? I've got a little indicator for new week opening gaps that I like to use. And look at that. We manipulated down into a new week opening gap. There is also SMT down here, I believe, with ES. Pretty sure. I don't know if I remember, but I'm pretty sure there's a bullish SMT down here, plus this new week opening gap, plus manipulation down into it. We're underneath these price lines. I know we're looking bullish. And look what happens. That distribution is massive, okay? Problem with today was I didn't find any good entries, and I'll show you why. So, first possibility, this is clearly manipulation, right? We're just like blah, 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 wham, which is also the 930 volatility, just like yesterday, only opposite directions, okay? So instead of going up really fast into those high time frame areas, we went down really fast into a high time frame area, a new week opening gap. Now, as we turn around, do you see any good fair value gaps here? Not really. There's one here. There's one here. Whoop, whoop, whoop. There's one here. So like, which one do you enter off of? There's one up here. So it just wasn't good. I mean, I'm not going to go down on low time or higher time frames again because I don't like scrolling around all the time, but it didn't end up combining into anything all that nice, which is fine. Had you taken something, it would have come back on you anyways. So it was a good analysis to be like, I don't like any of this. None of this looks good. None of it's clean down and up with one fair value gap that I can just enter on and go. There's a bunch of stuff in my way. So it was fine. Came back on us anyways, back to our new week opening gap. So I'm like, okay, cool. Attempt number 2. And do we see anything in here that I can enter off of? There's not a single fair value gap in this whole leg. Okay, that sucks. It's going to start going up now. Is this distribution? I don't know yet. We're still in the red zone, but when you manipulate, the distribution can happen immediately after your manipulation. So this manipulation happens. Distribution can happen from now until lunchtime. We don't know exactly when it's going to happen. We just know that's what's next. So you got to find the right entry to try to get in it and wait for distribution to happen. But anyways, it comes up here. I still don't see anything I like. And then it comes back to the new week opening gap again. So I'm like, okay, third time's the charm. It's clearly respecting this area. It's definitely not wanting to go lower than this. I know bullish price action is coming. How do I get in here? And I never ended up finding a good spot. But so then in this down leg, we also have 2. Cool. What happened last time there was 2? I just went to the 2-minute time frame and it merges into 1. Which it did very nicely right there. Okay, I know there's a lot of like lines and stuff, and like this candle's wicks are kind of hidden behind this line, and I'm trying my best to show you as clear as possible, but But anyways, we have this nice 2-minute. This candle didn't quite make it. That's fine. We'll wait till the next one. And it just rips. It just takes off. Closes way up here. I want it to close nice and close, or at least, somewhere in here. It closed so far up that it closed over or wicked over that swing high. That invalidates it for me. And it's not safe to take, which it did show me why. It did come back on me. So I would have entered here and gone through 105 to 95. That's 10 plus points of drawdown. Sometimes those numbers get a little scary, but it just closed so high and closed over this. You don't know if that's going to be the extent of it. It retested the inverted fair value gap and took off, really well. But you don't know if that's going to happen or not. So I never got in. And it traded up, kind of was real messy today. Tomorrow's FOMC, big, huge news event. So price action is always a little lackluster the day before. So I spent the morning trying to find a way in. We got some nice buy side up here, really tiny, close together, equal lows. I don't know how much they really mean anything. And then we've got London's high up there. So I didn't end up finding a good entry, because you see, we come up and come too far from this inverted fair value gap. It trades up. It could have been a nice little scalp there anyways. It would have been a really good entry, and you just hold it, but I didn't get it. So it comes down some, and I'm like, okay, maybe we'll get another one somewhere. And there's nothing here to enter off of. So it comes up again. I'm like, okay, starts to come down a little bit. And, every time it comes down a little bit, retraces a little bit, you look for that gap to form that you can wait for price to close up over. We got a little one here. I'll draw it out so it's easy to see. Little one here, but again, it just ripped and closed over more buy side. So I know it's going to come back down. It's not good for my entry. Again, it happened here. It came down a little bit, made this gap real small. I don't like when they're super small either. I like when they're nice and obvious, but it ripped over that one too. So there just really was no good spot to get in. And even if, I was thinking, even if I did find one, like this one rips up and does close over this little high, but it did still have this external, like that's the one you really want to worry about. So I thought I could get lucky, maybe get a move in there if I set my stop loss down below the swing low. It already respected this fair value gap, came down into it and didn't disrespect it, didn't fall through. It respected it and traded back up. So I'm like, this swing low might be all right if I get an entry in there. But the next thing I thought was, we had already taken this high, blasted right through it. And similar to the example that I showed you from the previous day, what happened when our target was taken? It was ripped right through with one big, string of big, huge candles. So I'm like, I feel like we're too high up. We already moved all this way. We already took some buy side. I don't know. Distribution phase is almost over. I don't really know if price is going to continue or not. I don't. It could reverse and come back down. It just wasn't in a good place that held confidence. It wasn't immediately after firing off of this new week opening gap that we had already respected for, now the third time. High area of confidence here. Beautiful setup. Should have taken it, but it violated my rules, and maybe those rules need to be a little more evaluated, a little more closely analyzed, but those are the rules that I have. And it did what it did. I didn't find an entry, and boy, did it rip. But guess what? We knew it was going to rip over here since 7:30 in the morning when we discovered that this was an X phase. This was a continuation phase. We knew this would be consolidation. We knew this would be manipulation, and we knew this would be distribution. I knew this was going to happen from all the way back here. So that's why I love quarterly theory. And it repeats. In the spreadsheet that I have linked in the description on the last 2 videos, I have a quarterly theory backtest, which is only like 10, 12 trades right now. But I'm going through and documenting how often it plays out the way that it's supposed to. You know, I don't know if not being an ICT concept loses any credibility to anything, but if we think about it, before ICT came out, there's still millionaire traders trading all kinds of different stuff that we laugh at now, like EMAs and other indicators, trend lines and support and resistance and all of that. I know people who make their living on trend lines and trend line breaks and the dumb stuff that we laugh at and trade against. You know, if it works for you, it works for you, in my opinion. ICT concepts is what first gave me something that actually made sense, something that clicked, something that worked in the charts. It gave logic. It gave algorithmic reasonings to what's happening. And I think quarterly theory fits that category very well. It's time-based. So is so much of ICT's concepts. It's time and price. And I was good with the price. I was good with this model of inverted fair value gaps and seeing price levels and how price is moving, but I didn't have much of a time context to know, is this inverted fair value gap going up going to be good, or is this inverted fair value gap going down going to be good? I don't really know which direction we're supposed to be, and this gives you a bunch of context in order to understand that. And so far it's worked out so well. I know when things are going to happen, generally speaking. I don't know if it's going to be nice and clean. I don't know if it's going to be messy. I don't know if I'm even going to get an entry. Sometimes you don't. So that's what I've got for quarterly theory. If you want my settings for this, is a GAN box. So open up a GAN box and draw yourself a GAN box from 6 a.m. to noon and turn off price levels, turn everything off, and then time levels. Those are my settings. Then you want to, with these colors and these settings, save it as XAMD. For AMD, it's just flipping the gray and the blue. So there's AMD, and there's the settings for that. Pause the video and do a little copy, screenshot, or whatever on those. That's all you really need. You need 7:30's opening price, midnight opening price. You can draw the levels yourself. You can look for quarterly theory indicators if you want to have, something drawn for you. But personally, hand drawing this box and the price opens is the cleanest way to do it. There's nothing I've found yet that really does it that way, that cleanly, and allows you to change scenarios. So you got to be able to flip the colors around if the day presents the XAMD scenario. So with that said, there's a lot more to quarterly theory. This is just the basics and how I've applied them so far. So again, for those of you that stuck around in the last video, you saw what I posted there at the end, and I'm going to post it again. I don't know if I'm giving the same link each time or if it's making a new one, but I don't want to put this in the description because I want people to actually watch this video and who want to be a part of this and aren't just, coming in to be spammers. So that's my Discord. You're free to join it. It's not going to have any really teaching or mentoring or selling anything or live streaming or price calls. It's not for that. It's for chatting and discussing, and I will, answer questions about what I do know, but I don't know everything. I'm still pretty new at quarterly theory too. So far it's just really awesome. So we can chat in there. I usually will do daily recaps. Right now at the recording of this video, there's not very many members, it's pretty quiet. So join up, get it popping, let's start chatting and learn some things from each other. So hope to see you there. Otherwise, that's what I got. Thanks for checking it out.